All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, but we're going to talk about the easiest play for the rest of the year. So I still got the recap for today. It was a wild day post-Friday volatility. There's a lot of things we need to talk about. I got the keys, the plays, all of that, but I have some pretty pictures I need to show you, and you need to understand them because it's showing how different this level of volatility is now, or at least right here, right now, compared to the rest of the year. So we're going to talk about that, but the easy play, I'm going to go over it more in detail towards the end of the video or kind of the middle, but it's going to be oil, and it's all about how you focus on it. So if you remember this video, we posted this in November 2021. We said trade of the year with oil. We brought up the SPR, and this is something you guys got to realize. What you get on this channel is a lot of long form content. Yes, I could just tell you what play to get. Go buy this, go buy that, go sell this. But I try to share with you the explanation. So I want to dive deeper into this, but the whole logic of what we're going over now is that, hey, look around, volatility's coming back. You got a lot of things happening with commodities. The rates are still going up, and we are entering an interesting time getting into the new year or winter in the new year. But oil is screaming a lot of things, and we said this throughout the year. Again, we've hit like 4,000 or 5,000% UNGs this year. We've hit every single Conoco, Oxy, every oil name you could think of, and this is what everybody says. Everyone's like, damn, I wish I bought more, and that is the easy trade. We're going to dive into it a little bit more. Again, come on stream and ask questions, but simply, if you are getting confused by everything you're seeing right now, I would just focus on oil, and you don't have to get lost in the sauce, and focusing on that towards the end of the year, it may very well prove to be a great opportunity, especially if you don't know what to trade in this environment, or it's like a little here, a little there. There might be a big trade forming with that. So I wanted to share that with you. Like I said, we're going to dive into it, but today, oh my gosh, it was absolutely crazy. There was definitely fear from Friday, but that panic was not there. So these are the pretty pictures I want to show you. The first one, this is just the VIX, and if you notice, it got to 22, but 22, that has been the average of the whole year. So even though Powell came out, market dropped, it broke a bunch of key levels, the VIX is literally below average or right at average. Why do I say below? Because take a look, May, June, beginning of the year, the VIX was actually way, way higher than where it is now. And with this volatility and people saying it's starting, it did not move much. So we're going to talk about that, but that's your first pretty picture. The second pretty picture, this is just showing you the weekly decline. And if you notice, last week, that was a 4% decline. Week before that was like 1.5%. And then you see we were on the upside. But take note, last time you had 4% declining weeks, that was June volatility and January volatility. April was the only time we didn't see it do 4%. And it was kind of just like 2.5, 3, 2, 2.5. But the point is, this is creating a crazy dynamic, and it's starting to talk to how people are positioned. People are asking questions. People are saying, wait a minute, all of what we saw, again, here was the chart today. It looked decent at one point, even towards the highs, but you pull the chart out, and look it, we did all of that work just to end at low. So the point is, volatility is here. The reaction wasn't that big today. And now this is leaving people to ask, well, does that mean it's not done yet? Or are investors kind of finding a way to manage all of this? So we got a lot to talk about. I'm going to go over all that, the basic keys, the plays that we made today. I made that YCS play, and I am loving it. And then we're going to go over everything else and what we're looking at for the rest of the week. So drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. It's right there below, free 99. We'll see you in the morning, especially in action. And you like it, it's my Miami shirt. Honestly, I'm just going to tell you the truth of the matter, man. I just haven't done my laundry. That's why. I mean, I wore the Europe shirt yesterday, but it was kind of because of laundry and Europe. But yeah, and speaking of Europe too, Germany, they had good news as far as gas storage. So that, okay, anyway, run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson. I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
So right into the keys, like I said, today you saw the fear, the VIX and a lot of things move, dollar bonds and all of that, but there was no panic. So maybe we're getting used to all of this, but literally what I showed you with the VIX to keep this, I guess to understand it a little better, out of the last 6 volatility increases this year, or when we started to go down, this has been the smallest so far with the VIX and even weekly decline in how it is. Pretty much what people and analysts are talking about after this last 48 hours, especially today, is like, yo, we could have capitulated, but we didn't. So it's either highlighting that there's still more to come, or investors are going to be a little less panicky as we get into some of the data. So that's the first real key. Again, coming in today, not much change. There was bad news out of China. They did more lockdowns. And again, like I said, with Germany, they had good news and that chilled out European natural gas, but our natural gas, it was able to keep rocketing. But that is your first key. Coming into the second key now, this is all about the rest of the week. Everything we talked about yesterday, it still applies. Again, I showed you both the daily charts. You didn't really see much today. Nobody feels quite certain yet. The bonds are moving. You got to watch out for that. But now, even though we get the data, the non-farms will be a big driver. However, it is looking like the Fed speakers this week, that's what's going to be more important. Pretty much a lot of analysts have been saying, well, yeah, we're going to get the non-farms, but you got a lot of Fed speakers, and now following Powell, maybe they actually listen. So keep all this in mind. You got Fed Barkin and Fed Williams tomorrow. We heard from Lael Brainerd today. It was a non-event. Then Mester and Bostic are on Wednesday. And then you're going to get Fed Bostic again on Friday. And then, like I'm saying, maybe the market will actually listen. But even though that jobs report is important on Friday, any of these Fed speakers, they might have the ability to kind of start moving the bonds or maybe adding to some of the volatility. So definitely keep your eyes out for that. But that is your second key. And finally, number 3, baby, I'm telling you, do not forget this. We brought this up on stream. Watch for 3.5% on the 10-year. So take a look. Last time you were there was right before the Fed meeting and Powell did the pivot. And as you see, we are coming back up against there. So it's very simple. Once it gets to 3.5, that will be a major driver for the market. And anything above there should cause volatility, or the markets will need to be repricing, and then we'll see where it stops. But that was kind of what people were anticipating coming in today. You saw some pretty big bond movements, but it hasn't gone enough yet to panic us. But I'm telling you, right when you see it get up there, you're going to watch people talk about tech stocks and repricing and bonds and so keep that in mind. And finally, like I told you at the beginning of the year, bro, right now you could just say F it and watch oil if you want to simplify your plays coming into the end of the year. Again, what we have going on with commodities, OPEC, the gasoline, the clean energy, or Europe, Germany, Italy, all of these situations, and then food and the crops and I'm telling you, you could go down the list. You got droughts even in China and all of these places, but you'll notice it does come down to oil. And if oil starts getting back up here, that may be the second wave. Remember, we were expecting it. It went down a little bit lower than we were expected, but even if we have a recession, and even if that hits in 6 months, that could still be bullish for oil. So what I've been saying and what we've talked about is like, yo, again, oil, we could tie it into the yen, and yen goes to bonds, and bonds and dollar. But what I'm going to tell you is that oil is going to show up at every corner. So if you really want to simplify your plays for the rest of the year, you might just want to focus on oil. Again, we've been in the oil future. We have a live BP play for January. We bought the Conoco dip on all of it. I've been in this play. There's been a lot of back and forth. And again, we've played it all throughout the year. But what I'm saying is that, hey, it's like if you're trying to find out, like, how do I play the yen? And how do I do this and do this? And maybe I could do this. And you're spread out all of these places, wishing you could get more. It might just be wise to watch oil. If we get that big move, you go on with size and just call it a day, and that's it. So that's what I'm saying here, because there's so many things moving. Watch the market and watch the key levels. But then again, in its own little world, oil is going to do its thing, and it has silently been creeping up. Now, it still could take a little time. Why I'm bringing this up to you now, and this is where I hope you watch this long to hear it, but it's like this is going to be kind of the warm-up leg, and then towards the end of the year it gets crazy. Pretty much a lot of people are pricing ahead of winter, and we talked about that seasonality, so keep all of that in mind and watch out for it. But I'm telling you, you could watch the market. If it's getting confusing on what to play, there is a very, very just shining bright red light on oil, and if you focus there, it just might go a lot longer and a lot further with all of your opportunities. So keep that in mind. Those are the keys. And finally, we brought this up today. These are just the key levels. It was some technical strategists in the morning, and I screenshotted it, and I liked it, and we noticed that it hit really, really high today. So literally that 417 June 9th low, that was your low of the day. We were right below it, and even the high, the 40.58 and the 40.62, those are the levels we topped out on. But screenshot this one, save it, and see. But like we've been talking about, I got the 400, 397, 394 levels, and it does match up really nice here. But overall, just watch how the market is moving, and that's why I'm saying, tying into oil and all this, we should see something move at the levels, and then a lot of the externals and oil, they may do their own thing, but a lot of that we kind of just have to react as opposed to predicting and pay attention to where it's going. But that is the basic rundown. I hope you got it. Like I'm saying, it's kind of simple if you want it to be simple, but right now the market is in a weird middle of like, wait, are we capitulating? Is it not that bad? And maybe the Fed speakers and data drive us home. So I hope you're ready, but let us get into the plays. So right off the bat, I got 3 different plays. Surprisingly, I actually didn't day trade too much. I opened trades. I didn't end up selling them, and one of them I am going to be riding throughout the week, but we got to start with play number 1, YCS. I brought this up yesterday. Please go watch yesterday's watch list. Again, like I'm saying, I want you guys to understand this stuff. Otherwise, I could just put it out on the shorts. We have some, short form content if that's what you're interested in, but I do want you to understand this, and the real key is the yen is linked to the euro and the dollar, and if that 3.5% 10-year goes up and the bond yields go up, it affects all of those things. And then even this morning we heard from the Japanese government, they said they don't care about inflation and they think it's actually going to come down next year. So Karuta is even saying it's transitory pretty much. But the whole idea here, I've been shorting this. I think we're about to see more pain essentially if bond yields, more Fed raising on our part, weaker global currencies, especially in Europe, chances are it's going to affect the yen, and this has been important. And again, the yen is at a breakout level. So I went with the debit spread today. The problem with this, and like I'm saying here, you just got to watch out for the pops, and you want to make sure that you are playing the dips because it can get expensive, and if it does come down with volatility, you will get clapped. So keep all of that in mind. But as far as the play, I grabbed a February debit spread, or did I go with February? Yeah, I went super far at the money. I grabbed a 75 call, then I shorted the 80s. I got 20 of them, spent about 35 cents a pop. It's like a $10,000 max gain, but it is far at the money. The reason why I'm willing to go far at the money, because if it goes crazy, this is a volatility index. It might be able to have some legs with it and move. Otherwise, like I said yesterday with a couple of the plays, I'm just going to watch and ride this one down kind of like the UNG and keep my eye on it. But remember, I have big exposure with that Japanese yen trade. That trade in and of itself, I think it's like 50 grand notional value of what it represents on the contract. So keep that in mind. But I really like this, but it is an advanced play. You don't have to get too crazy for it. Honestly, if you want to simplify it, just don't get clapped on premiums. You remember EWG? That's exactly how I feel about this one. I think the move is there. I think it could move, but it doesn't mean the premiums are going to play along, and that is what we have to be cautious for. So that is play number 1. Keep that in mind. And play number 2 now, Netflix. I went short on them today at like, what, 227 on 50 shares, but they have been a big outperformer through all this in their earnings, and even today, they were leading the market. We were down 1%. Netflix was up 2%. That's why I decided to go with this short, but now kind of seeing how it's moving and seeing that they got meat on the bone. Again, I like them for my long term. I'm just saying as a volatility play this week, if things give up, I would definitely be eyeing Netflix, and now we have about 50 shares that we are short that we are holding. So watch out for them. That is play number 2. And then finally, baby, play number 3, uranium. I'm only putting the ETF here. You could go for UUUU and CCCJ or CCJ. So many letters. We have the quadruple U's. We got them a long time ago. And again, we have some of the cold plays too, but uranium, I like it and I don't. And here's the simple line for you. High risk, high reward energy play. We're talking oil. You can focus on that. Guess what? It will tie into uranium. There's no denying that. That's why I'm saying it's just higher risk, higher reward. Go look at a lot of them. They have not came back to highs like oil has on this move. So that could be saying something, but also that could be a lot of value. But all I'm saying right here is that as of late, the only downside to this play is that a lot of the uranium stocks, the upside volatility in the last couple days is huge. They've been moving 8%, chill out, then another 8%. That is going to jack up any of the premiums, or if it makes one simple pullback, you'll be down 16, 20% very, very quickly. So I like it. I pretty much see it as a second to third tier oil play. It has more value, and that's the best part about it, but that's also the risky part. So I like it. I would definitely keep your eyes out for it. People are talking about it, and it's there. And I'm saying, if this meets your budget and you like it, I mean, go for it. Again, I have the old UUUs. I'm chill with $800 worth or whatever, but depending on how things play out, maybe in the future, you've seen me do this where what happens, I'm like, I don't want to play UNG, it's too expensive, and then what happens, it breaks out of a regime, oil goes 10 times crazier, and now the other one's just chilling there, then I'll go for it. So I may want to add to it later, but right now, I'm just worried about the velocity, but definitely keep this one on watch. But those are the main plays. As far as everything else, like I said, I did not make that many trades today. I got the YCS. That was my first trade in the morning. Then I got the Netflix short, and then I bought 500 shares at MBRX. This is a biotech. They got a drug, infant drug, I'm blanking on this. So it's just, what is it? Hold on. I'm not even looking this up. I want to get it. Hold on. Let me, hold on. It's like infant drug. I know this. I talk about it all the... Orphan drug approval, something like that. But anyway, small market cap. It's like $40 million or something. Usually that could lead to a PRV, but it's not. I need to do a little bit more research, but I figured, hey, I could go get $500 worth, $700. Let's see on shares. They got the FDA approval. Let's see what happens. But there was that play. And then I bought 50 shares of Dash out of pure FOMO because it popped up on No News, was on the high ticker. We didn't do anything else all day. I was like, let me get 50 of them. I think there's going to be, and there was nothing. So I'm down like 120 on that one. But there was all that. Still holding some of the other plays. Remember Friday, told you I took some of those losses. The Twitters came back. The, what's it called? The Seagate? No, what was it? GSAT. That one went up and then came back down. Still holding that. And that's pretty much it. And we got the EWG corn, everything else. Again, if you have questions too, come on stream. And it's a lot easier to show you all the active positions and everything else. But those were the main plays. As far as everything else, I'm going to be watching oil. I'm going to be watching some of the financials, some of the plays we called out with some meat on the bone, and just seeing where do we go from here and what's going to be the bigger driver, the Fed or the data, and then getting ready for the CPI the week after that. So I hope you're ready, but... that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, even if you were scared, even if you were dissatisfied, it's all on you to perceive what you got and where you are at right now, ladies and gentlemen. Again, you're living through a unique time, and just imagine you were chosen for this. I'm sorry. I know it's a lot of pressure. I get it. I know I say this shit all the time. I'm trying not to even cuss for y'all, but I'm just saying, bro. Like, bro, why weren't you born in the 70s? Huh? Why were you born for this round of inflation? You know what I'm saying? Why did you come across the code? Why do you know about the long term and puts and volatility and all these? Why do you know so much about oil? Yeah, Chad, I'm telling you, you were made for it, baby. So let's go. Keep the head up, and you need to perceive what's around you. Again, you could have gold in your hand, but if you don't know it, don't matter what anybody else tell you, you got to realize it, baby. So stay in the game. I love you, Chad. Drink that water. I'm going to see you in the morning, and let's go. Let's finish out an awesome week, baby. It's already starting good, but... that's it. I think that's it. I think that's it. I love you. Okay, you like my Miami shirt, bro? I'm smelly as hell. Okay, I love you. Yeah, bro, I didn't leave.